At some point, every growth stage firm hits the same ceiling. The books are technically done, but they're late, they're fragile, and they depend on one person. If that person leaves, gets sick, or even just falls behind, your entire financial picture stalls. This is where most firms make the wrong move. They hire internally too soon, or stay too long with a solo operator who was never designed for scale. Today, we're going to talk about what actually replaces that model and why the right accounting firm isn't a vendor, it's an infrastructure.
Welcome back to Unfiltered Profit. I'm Caitlin here with Shauna today, and we're talking about the transition that every growth stage firm eventually faces, and that's outgrowing the solo bookkeeping operation. Usually this happens definitely between the $1 to $5 million in revenue, and the business, it's working, the margins are better, but like the financials aren't done enough. They're not done quickly enough. They're not done quality enough. And so today we're going to talk about what that looks like, why kind of the gut reaction tends to be like, oh, I'll just bring it in-house and hire an admin. And that's not the right answer either. And then how it kind of can break down if you do stay too long with that solo person. So we're going to have a fun conversation today about all of that and kind of what the solutions exist for you and how we think they work a little better.
Yeah, I feel like this is a conversation we've had parts and pieces of through different past podcast episodes, but it's important to have its own place, I think, because we do see this time and time again. Potential clients making the wrong step here. I actually just had this conversation yesterday with someone that I helped set up their accounting system several years ago. And at that time, they weren't an ideal fit for me as a client. And I tried to pair them with a different bookkeeper. But anyway, long story short, they hired in-house. And then that didn't go well. And then they hired in-house again. And now that person's leaving. And they're like, you know what? Let's call up Shauna and see if maybe now we're a good fit for her. So we see this a lot. We see these people that are just like, well, I'll just hire it in-house. And I don't like that piece of it. But I also don't like where they started from, which a lot of times we see when people are like, okay, how do I find the cheapest bookkeeping option? Because I don't want to do it anymore, right? This is in those early days of business. You're like, I don't want to do this anymore. I've got enough revenue to pay someone something, but not a full firm. And so they find this like solo bookkeeper. I don't really know what their technical background is, right? Because anybody can call themselves a bookkeeper. And they're not part of a firm and they're handling the bookkeeping. Hopefully it's going okay. Even if it's not going 100% okay, they have a CPA who's doing their taxes. So the adjustments get made and we're rolling along and like taxes are filed and everything's like air quote, okay.
Yeah.
Right. And then the company grows.
Yep. Which we want it to. And the transaction volume grows and the complexity grows because maybe they're buying assets or they have employees. And now it's like, does the bookkeeper know how to make sure payroll is captured correctly or the assets are, any of these different pieces. And what you see is someone who has priced a client low. Guess what? You go down to the bottom of the list on monthly completion. So as your volume goes up, your priority goes down because they're like too afraid to go back to you and be like, hey, you deserve a higher price. So they're like, I'm just going to put that off. Or it's hard. I'm just going to put that off. I'm not going to do it right now.
Yeah.
Or I got sick or I want to take vacation. And that's, the solo bookkeeper, I mean, that's what we had at one point, right? Solo operations. And then eventually we added an employee. So we have been there. Yep. The thing is that works for a certain clientele for a certain period of time. And then you do kind of need to make the decision. And so you'll see that kind of fork in the road. You'll see the ones who say, okay, cool. I'm going to reduce my client load. I'm going to up my advisory and consulting. And that's how I can manage this. Some will offshore it. And as we've seen, that doesn't always go so well. Sometimes people luck out. They end up with a great offshore solution. But again, you can't control it as much. And so as the client, you're left going, cool, now what? So do I hire in-house? Because like this solo isn't working. They're not getting me the stuff fast enough. My 1 to 4% of revenue can afford me more. It can afford me 40, 50, 60,000 a year in accounting services. So I should hire someone, right? Like bring someone in-house. And that seems to be the thought. And that's where I want to be like, no, you don't. Like that's, to me, maybe the worst solution, because you're hiring one person with no oversight, because you're not going to do it as the owner and there's no CPA to do it. And now the mistakes can get bigger. The fraud can get bigger and nobody knows, which terrifies me.
Yes, that is the biggest piece. And I think it's easy, to play devil's advocate. You can sit here and listen to this and be like, yeah, okay, Shauna and Caitlin, but like those are the services that you sell. So of course you're going to say this. And it's like, let me tell you, outsourcing your accounting to a firm is a fraction of the cost of hiring a US-based in-house accountant or even an admin.
Yeah.
Because I don't know if you're paying attention out there, but cost of employees in the US just keeps going up and up and up, especially with minimum wages in different states getting raised. Like it's not cheap. And so you're not just talking about payroll and benefits and all that stuff, the training. And if you don't know accounting, how are you going to make sure your accountant is doing accounting? And we even see it from our side where we're involved in clients' books. But then we're like, hey, like, tell me a little more about this process. And they're like, oh, so-and-so just takes the checks home and prints the stuff there. They have a stamp for my signature. And we're just like, red flag, red flag. And that's even with us involved. And so we're like a second set of eyes, but we don't know what checks should be necessarily written all the time or not written. And if you're like, yeah, fraud is so few and far between. It is not. It happened in my parents' company, and it's happened in several companies. So it's more common than you want to think. And it's small stuff, but it exists. And so you can't be too careful. But if you don't know how to train them, you don't know how to oversee their work.
Then you have to hire 2 accountants or 3 accountants. And like all of this really started because I was having coffee with my old boss, and I used to work at Union Pacific. And I remember going to a meeting. I missed something. He missed something. His boss missed something, and the VP caught it. That's a lot of layers of review.
Yeah.
And we're glad we caught it because at UP, you're talking millions upon millions of dollars in the errors. But that's because we had the layers. Like as much as we want to shrink it and become efficient, there is something to other people checking the work and bringing the fresh set of eyes and bringing that experience to it. That, I mean, my boss had at that point 20 years of experience. Like we're not talking that we were just off the street figuring this out. I was a CPA for like 5 years, and it just happens because we're human. And if you don't have those layers and you can't afford those layers, because you really do need that separation of duties. You need the accounts payable clerk to be different than the accountant, to be different than the controller, and different than the CFO. And when you start to squish that too much, suddenly we have a big problem. And so, yes, you could probably afford one in-house data person, but is that going to really give you what you need, which is a layered review, continuity, a firm that replaces their own people, has their own trainings on you as a client? And I can guarantee if you're leaving that solo operation and you're like, hey, I'd like you to come and train my new in-house accountant, they're going to go no. Or it's going to cost you an arm and a leg because you're taking business away from them. They're not inclined to train your new person for free or cheap.
Yeah, especially when they now need that time to go sell more services to replace that revenue.
Yeah.
But let's talk about that layered review approach a little bit more. This is something we've been very intentional about in structuring our firm of like, okay, for all the tasks we do for clients, what are the riskier things? Like whether it's a client deliverable or cash changing hands, so bill pay or invoicing, those different pieces. What are those, and how do we make sure we've got multiple layers on it? How do we know that if it's payroll, the client is approving it and who's supposed to be running it versus sending the report? all those different pieces we've taken and we've segmented out to like the staff accountant does it, the senior accountant does it, the client must okay those pieces so that it protects us as a firm. Yes, absolutely. But it's protecting the client because at the end of the day, it's the client's money that is what we're caring for in that process. So even if you're like, okay, cool, I'm going to go to a firm, ask about that approach. Is it just like you get your girl Sunday? That's probably a bad thing to say in this day and age. I don't know if you're allowed to say girl Friday because it's girl Friday. It doesn't matter. Girl Sunday. I always think of myself, if you're a fan of NCIS, I always think of myself as Ziva and how she messes up the American euphemisms, except I am very much from the United States. Who's like, you want to mix some metaphors? I'm your girl. We're going with Girl Sunday over here.
It just makes it better. That's all.
Yeah. Sunday's a good day. There's no work on Sundays. Anyway, if you're assigned your accountant, will be correct within that. And then you ask, okay, well, you guys are going to do bill pay for me. You're going to help with payroll. What do those processes look like? Mm-hmm. Oh, they'll run payroll. Oh, they'll pay your bills. Like, okay, but what does that process look like? And those are good questions to ask along the way so that you make sure that that firm has internal control so that erroneous bills are not being paid of made up vendors that you haven't okayed, and just those different pieces along the way.
It's so easy. Like if you guys know, if you've listened to this, but if you talk to me as a potential client before I merged with Shauna, I refused to take bill pay work. I refused to do that because I didn't have the internal controls. And I was terrified of something happening and getting sued. And I was just a typical accountant. But the problem is the stories are so simple. So-and-so, the admin or whoever is doing the invoicing, creates a pretend vendor. That vendor happens to be their brother with their brother's bank account. And it's a few $1,000s here and there. And suddenly, whoop, the business is out hundreds of thousands. It was a complete error on our part and a mistake on our part. But we accidentally paid an employee who had left the company that we were running payroll for because we didn't have the process we now do, which is here is the whole payroll report. It was simply, this is the cash coming out. Well, that looks about right. Owner said cool.
Yeah, and when you
said cool.
When you're told to leave an employee in the payroll account,
yeah,
so that they can have a severance paid at some point, right? There are things that happen.
Yeah,
there's room for error. Like, we're human. We make mistakes. So every time anything like that happens, we sit back and we go, how can we make sure that never, ever, ever happens again?
Right. And it is. And so now that's the thing. We print out the payroll report. We send it to the owner because there's so much that changes that, again, it's communication. We mostly hear from the owners, but sometimes they forget. I forgot to tell you I'm changing that benefit. I forgot to tell you this week it's this much more for some weird reason. That's fine.
Yeah.
But if we're sending it, and then we have had owners in full transparency be like, that's too much work. I'll just run it myself. That is fine.
Right. Yeah.
You have control. I'm cool with that. But when you're working with a firm, when you're working with one who's very conscious about those controls, yeah, it's probably not necessarily as easy as clicking a button, but it shouldn't be, because the last thing you want is me making up an employee and being like, hey, we're going to pay so-and-so. And good luck finding that money in 10 years.
Yes. And I mean, it also goes back to, it's nice to have a couple of sets of eyes on anything that involves money. That is the piece of having us in there versus just the owner running payroll. Is like, I've had owners okay payroll, and I was like, oh, I looked back at it, and for some reason the payroll system kicked out all of your benefits this payroll cycle. So now nothing was going to be deducted, and it would have been a headache to go back and fix that. That was on neither of our parts. The system messed up, but it wasn't caught. And so if she had just been like, cool, looks good, I'm going to process it myself, well, my set of eyes on it helped that situation. So I do think when it comes to money, more sets of eyes on it is better. And that's true in your financial statements too, right? Like, this isn't just about bill pay or payroll or something where cash is being paid out. In your financial statements, it's nice to have someone else looking at it and saying, hey, like, that margin doesn't look right. Like, what is going on here? Why is your payroll such a high percentage of your revenue? Like, what is that telling you in operations? Just some of those questions that come up in just staring at a financial statement. If you're just plugging along, plugging through it, checking the box, getting it done, great. Your taxes get to be filed and your firm doesn't get to scale because you're like, I don't know how to do this without losing cash.
Yeah. And those discussions that happen, I mean, when it comes to taxes, is it deductible? Is it not? Like all of it gets to happen behind the scenes that you guys don't see. You don't need to see our Slack channel where we're debating expenses that are going through and is that deduction or not and who's standing on it. But that's what you get with a team is people who think about it in so many different ways and come to the best answer for the client as opposed to we don't have time or someone offshore did it and we're just trying to get it through, or this is simply for the purpose of preparing tax returns. And that's a different reporting than I'm making $1, $5, $10 million and I want to exit at some point, because then who's going to go and defend those books to a broker and say, hey, these are good. They can go. These are where we've put the expenses that you need to add back. There's just so much that comes with that growth and that succession planning that you benefit within kind of a team aspect. And it's a fraction of the cost when you hire like a firm versus trying to bring it all in-house.
Yes. It's a fraction of the cost, but it's also not free.
No.
But I do see that, that comes up with people that are at the right point of where their 1% to 4% of revenue would equal having a good accounting team supporting them. And they're like, well, that's $10,000 a year. I'm like, yeah, it is, but that's because that's your tax return plus all of your accounting support and tax planning. Like, of course, it's going to be $10,000 a year. It's not going to be $100 a month. Like, again, we're US based. We're not like, you can do the math. I know you're smart enough. You can do the math of all those pieces. Like, it's not fun money to spend on your accountant, but it can be when it leads to more profitability and scaling and a higher multiplier when you go to exit.
Yeah. And peace of mind, just knowing that it's handled.
Yeah.
That someone else was there thinking about it all and handling it for you, as opposed to the state coming back 3 years later and be like, hey, where were those sales taxes you were supposed to file? Oh, great question.
Yeah. What were my sales even? I don't even know.
Yes. No, it is not. We're not here to value price. We're not overseas. It costs money to live in the United States. It costs to have employees and to pay them well. And we value that. But we value delivering a product that you can count on and that your CFO can analyze and you guys can plan around, and that there's no guessing about it.
Yeah. And you're supported no matter who is in office, who's out sick, whose kid kept them up all night. All of those things.
All of the things. Yeah. And then there's just those layers. And there's a reason the big public accounting firms have layers. And as much as sometimes you sit there and you groan and you're like, do you really need a staff, a senior, a manager, a director, senior manager, and then like a director or partner? No, we can probably do 3, 2 on most days, but you still need something.
Yeah. Well, hopefully this has given some actionable takeaways for you to assess where you're at in your current accounting system, what that structure looks like. We could talk a whole thing about a firm structure and security, that like IT security, all of those pieces, which I know we've hit on in past episodes. But think about this in the scope of where your business is at, how timely your financials are, and what the next right move for you is in your accounting, especially as we're in tax season and you're experiencing your frustrations with whatever that looks like for you. Keep in mind the marker for how much accounting services should generally cost your size business, and understand that sometimes you pay for quality. Not sometimes, always you pay for quality.
And as you should. And it's not something you want to go cheap on and suffer the consequences of that. But as we leave you today, growth doesn't break your bookkeeping. It's going to expose whether you had that financial infrastructure in the first place. The problems that start when you're tiny just get more noticeable when you get big. And the right model isn't about more people. It's about layered systems and continuity and clean and reliable numbers that support decision making. So if you're at a transition point and you're evaluating what comes next because you've done taxes and that's given you an answer you didn't love, we're open to having a conversation with you. And you can always reach us directly at unfilteredprofit@justprospera.com. And we'd love for you to share it with anyone you think would benefit from this. Thanks.